Okay, this is another general education video. In this case, it's why buy multifamily properties. Again, this is buying properties is case by case. You're going to want to talk to the professionals in your area. This is just for general education. So first off, I created a video, why buy properties, and you should refresh yourself by watching that video first if you haven't seen that one already. But some of the general terms that came out of that video were equity, leveraging, tax advantage, inflation protection, line of credit, all of which are going to apply to our multifamily video. Okay? So when you're buying a multifamily, which I particularly like, your buying power is going to increase, but you're still going to have to provide similar financial data. So whatever financial information you're providing to the bank or the mortgage broker, you're going to have to provide for a multifamily. However, there's one perk. They're going to take into account the potential rental income that you're going to get from the property. So your buying power is going to be increasing. Now, many banks take about 75% of whatever the rental income is. So in this case, I will be eventually talking about a $1,000 rent per unit. So they would take $750 to count towards your data or your figures. So one of the reasons I promote multifamily investing is because it's similar to buying your own property. It's yours. You can live in it, and you're able to get the same perks as you would with a single family, except you get more tax advantages. So you're using other people's money, OPM, which is going to be very popular for the investment crowd. Other people's money to pay off your loan, not necessarily quicker because some people like to leverage their loan out, but they're going to be paying down your mortgage. And you're going to be able to use other people's money towards strategies that you deem important to your financial future. Your return on investment, your ROI. Many people believe that single family homes, if you're going to live in it especially, are not a good investment because they are always taking money out of your pockets, or there's always a cost associated to them. Famously, Rich Dad Poor Dad talks about that at great length. So this idea that you can buy a multifamily unit, in this case, we're going to use a sample with the 4-family in which the owner is going to live in one of the units and rent out 3 units to your advantage. So in this case, this property would cost above 500, but you're going to take out $500,000 loan, which at 4%, which is common right now in 2008, would cost you $2,387 per month. Sounds like a very big number. However, you have the 3 rental incomes. So each unit is bringing in $1,000, and that's going to be able to bring you cash positive, where the $3,000 is going to be able to pay off your mortgage and get you positive cash flow of $613. Now, that's not even counting if down the line you say, okay, this was my first place, this is a 4-family, eventually I want to live separate from my tenants. Great, no problem. Now, down the line, you're able to now rent this unit out for another $1,000. And you now have $4,000 of a rent roll, which is going to generate you $1,613. However, as the landlord, a good landlord is always increasing the rent to adjust or account for inflation. So you're constantly going to be increasing this rent, small number, 2%, 2% every year. So with the same principles that we had with the single family home, your mortgage is going to stay the same. You're going to be consistently paying $2,387. However, over a 20, 30-year period, the rent is going to drastically jump. So this $1,000 rent could easily go to $1,500 20, 30 years from now. Okay, so now you're pulling in 20, 30 years from now, you're talking about a $6,000 rent roll when your mortgage is still the same. Okay, so long term, this multifamily investing is going to have the ability to bring you more equity, stable leveraging, right? More tax advantages because now you can write off depreciation. You can write off lawn service. You can write off anything that you do to improve the living standards of your tenants, um, garbage removal, any work done. You want to replace the appliances for your tenant. All of it will be a tax write-off, and you still get the ability of inflation protection and a bigger line of credit. So now, 10 years down the line, your tenants are paying down your mortgage. You'll be able to refi, pull some money out, buy another property, and you just get more flexibility with multifamily investing. That's why I am a big advocate for multifamily